Thanks to the Bureau of Economic Research, we've just published the third quarter Business Confidence Index. And on the face of it, the results are not that encouraging. So if you look at the detail, we'll see that the BCI dropped 3 points from 42 to 39, and it's now the second consecutive quarterly decline in the BCI. But what struck me is the detail behind some of the results, particularly if you look at some of the consumer-facing sectors that the BER surveyed. Care to elaborate?
Absolutely. We've seen that retail confidence has improved. And we think that, this is quite broad-based, and we think that it's really been driven by continued consumer resilience, which has been underpinned by the fact that we have a continuance of the special relief of distress grant, which does continue putting money into people's pockets, those who otherwise perhaps wouldn't have been able to spend. And we are seeing, albeit slow, an improvement in employment, which is really, helping people be able to go out to the shops and make their purchases.
So confidence amongst retailers improved then, and it's back above 50 in net positive terrain, and it's actually been there for quite some time. So not a bad story at all. I guess consumers are also getting a little bit of help from the fact that interest rates are still below pre-COVID levels. And let us not forget the fact that foreigners are increasingly coming back to our shores, certainly helping the retail sector as well. The other consumer-facing sector that the BER survey is new vehicle dealers. There's an interesting story.
It is indeed. It's been a story for a while that has a similar theme, and that is that our new vehicle dealers are seeing very positive movements. Actually, so much so that if they had more cars to sell, they would sell more cars. So their major constraint really is that they just don't have enough stock on the floor that is either coming in from offshore or even being manufactured locally for them to be able to push out. So they are seeing, good volumes, good profitability, but it actually could be better.
So basically, what you're saying, or a key takeaway from your response, is that consumer spending is certainly not collapsing. In actual fact, there are pockets of strength. Okay, so let's move the conversation away from the demand side of the economy, and let's focus a little bit on the supply side of the economy. So in this respect, the BER also surveys an important sector, manufacturing, 13% or so of GDP, so quite an important sector. This sector was hit very hard in the second quarter. A number of special factors. Remember the floods and very intensive load shedding, stage 4 and so forth. And we saw confidence drop sharply to a low level of 28. In the third quarter, confidence kind of stayed at that low level. So my question is manufacturing in ICU in all the segments of the manufacturing sector?
Absolutely not. When you look at the underlying sectors, we see that 3 out of the 4 were either flat or actually saw an improvement in confidence and as well as activity. And this activity does seem to be underpinned through improved demand from the export side, but also an improvement in domestic demand. So this is, pulling through due to your improved, and continued robust consumer demand, which is then asking for more product from the manufacturers. And what again is an interesting theme that we're seeing, very similar to your new vehicle retailers, is that one of the constraints in the manufacturing sector has been a lack of raw materials for manufacturing, which would suggest that our manufacturing sector could actually be doing even better if it was getting the raw materials it needed.
So we shouldn't focus too much on the headline BCI number that came down a little bit. The underlying data is certainly more robust. It paints a little bit more of an upbeat picture. What does that imply when we look at the next data point when it comes to GDP, considering the fact that we've just heard that the economy contracted in the second quarter? Should we be as concerned?
I don't think so. Given this underlying data that we've seen, confidence, while being cautious perhaps at the headline level, this resilience in retail, resilience in your car vehicle sales, and even in manufacturing, the fact that there does seem to still be capacity in the economy, both from the supply and the demand side, very much supports the idea that we will continue to see an economic recovery, and so most likely growth, perhaps moderate, but growth in the third quarter.
So second quarter GDP contraction temporary. We look forward to positive growth in the third quarter.
Yes.
Thanks, Siobhan.